we have a massive bubble in equities, and it has to be reconciled. And there's only two ways it can be reconciled. Stocks go nowhere for about 10 years, and GDP and incomes catch up, or the stock market has to crash. It's the only two ways it's going to happen. And I've never seen a bubble. I've never read about a bubble. I've never witnessed a bubble. I've never experienced a bubble or heard a rumor about a bubble that burst innocuously. They all crash. And this one is a gigantic one.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. We've got America's #1 pickleball warrior with us today, Michael Pento, pentoport.com. Michael treats the markets like they were just another game of pickleball, and usually he wins. That's why you need to listen to him. Michael, your recent commentary describes the U.S. economy as approaching a historic reckoning. This was in your November 7th piece. Could you summarize, please, what you see as the core reckoning and the variables involved in it?
Okay, Professor, I will try to do that for you. Well, first of all, I've been saying now for several years, and I'm sure I'm being derided in many different venues, that we have a triumvirate of bubbles existing concurrently. So I kind of feel like Alan Greenspan with his irrational exuberant speech in '96. Well, it took 3 years or 4 years for that to pan out. So, we have the biggest three bubbles ever in existence in U.S. history, and they all exist together for the first time. So credit, real estate, and equities. And I got to tell you, you look at what happened today. So you have, you got a guy named Jensen Huang coming out and giving a beats the street, and the Wall Street sends the stock up to the moon, and the market was up almost like 2% when I left this morning for my pickleball match. Yes. And I come back and it's down. Nvidia is down 1% as I'm talking, right before I got on the interview with you. When a CEO comes out and says that orders for his chips are off the charts in a prepared statement for his earnings release, it's just like, what am I dealing with anymore? We live in a world of carnival barkers, and it's a freak show out there. It's not just in corporations, it's even in the government, where we're giving dividends to people from tariffs, which are being repealed as we speak. We have tariffs on cocoa beans and bananas, which we don't grow in the United States. We're supposed to have tariffs to help rebuild the American middle class and manufacturing base. But we have tariffs on bananas. It doesn't make any sense. So the tariffs are going on bananas, but the tariff revenue is going to go on the bananas too. And it's funny thing is, we're talking about sending $2,000 stimulus checks to people. And that's supposed to be like a dividend payment, but we have $1.8 trillion deficit.
It doesn't make sense.
But it doesn't make from whence and from where are you getting your money from? If we have 124% debt to GDP, $38 trillion national debt, and is growing by $2 trillion per annum, and you're sending out a dividend? No, what you're doing is sending more helicopter money out. But people say what they want now. They say that the demand is off the charts, which doesn't. You sound like a charlatan. You sound like a carnival barker when you say that. And you have a government that says that we're sending out, we're giving you a refund check from the revenue, from all the revenue from tariffs, which the tariff revenue was supposed to pay down the deficit, bring it to zero, and then hopefully start paying down the national debt. Well, is that happening? You get the truth here. None of those things are even close to happening.
That is exactly it. It's just like a tax rebate, but they call it a tariff rebate. And look, we've got, I don't remember how much international trade we do, something like 20-something trillion. But if you were even to say, a 10%, we were getting a 3% tariff. If it went up to 10, we'd take in $2 trillion. which, what happens though is you don't really take it in because people find substitutes and they find workarounds, right?
Well, the big workaround from Liberation Day on April 2nd was we're going to have massive tariffs on the rest of the world, and we're going to rebuild the Americans' manufacturing base. And then when the market crashed like 20% in a few days, we've been walking that back. We've been doing the moonwalk on that ever since. So the tariff revenue is going to be very minimal, and the debt and deficits are going to go higher and higher. We have a central bank too that they're trying to reach 2% inflation. By the way, that's now stable prices. It's not 0, it's 2. So you can't reach 2 for 4.5 years. So what do you do when you can't reach 2 after 4.5 years? Well, you ignore inflation, and then that would be bad enough. They're not even ignoring it. Now they're going to go back into QE and start and they're in the process of lowering interest rates. You know that, right?
Sure.
But if you can't make your 2% inflation target and you miss it to the upside by 50%, what do? Well, you start cutting rates and printing money. I feel like I'm in bizarro land here. This is just, and nobody tells the truth anymore. Whether it's orders or vendor financing orders are going through the roof, off the charts, and we're sending out rebate checks to people because of how well this is the greatest country the planet has ever seen. But in the meantime, the red ink is spewing over the damn walls.
Yeah, I want to correct myself. Our annual import tab is 4.1 trillion. It's actually higher than that because that doesn't include illegal imports and a lot of stuff that was going through the de minimis exemption. Even if it was 5 trillion and you managed to do a 20% tariff, that's only $1 trillion. And then we still have the issue of substitutions and workarounds and all of that. So there's no way that the revenue from tariffs could have ever made up for the U.S. trade deficit or U.S. budget deficit, right?
Yeah, well, tariffs have been in place now for a few months now at least, and we still have a $1.8 trillion national annual deficit. So the revenue isn't there, and if the revenue isn't there, what are you giving back to people? You're just deficit spending. You're doing the same thing, Kerry. What caused the massive inflation that we had post-COVID was helicopter money. You didn't just bail out the banking system. You went around the banking system and sent checks directly to people, and they went out and spent the money. So it was an automatic huge increase in the broad-based money supply, chasing too few goods. I mean, we had inflation bottlenecks. You remember it was 20% inflation. The way they counted it was 9. It was really 20.
And the thing that bothers me about the whole thing is that the inflation we had was equal parts Trump and Biden. All right. Trump was as responsible for it as Biden, but Trump got to leave office. So Biden got the entire responsibility for it. But Trump is
at least Trump had an excuse. He had, we had the COVID crisis. I mean, the COVID was over. Biden was, but now what's the excuse now? And the greatest economy the world has ever seen. Why are we sending rebate checks out? I mean, I'm all for cutting taxes. It's a wonderful thing, but you disrupted the whole world and the markets with these tariff BS, and now you're trying to send that money back to them. It doesn't make any sense to me. You know what you want to do? Here's what I would do. I would cut taxes and cut spending commensurately. So you starve and kill the cancer known as government. Thank you, Ronald Reagan. And you empower the people. But we're not doing that. We're not doing that.
And that was why initially Doge seemed really hopeful. And I think Doge is still working behind the scenes because they made a claim, it's coming up now, that they plan to, using the Doge AI tool, cut 50% of all the government regulations, which are outmoded. A lot of them now are illegal due to recent court case developments. What happens if they cut half the government regulations out there, Michael?
That would be wonderful. That would be a huge boon to the private sector. Let's see if it happens. In the meantime, let's talk about the credit bubble that we have. I mean, let's talk about live in the real world with AI. I mean, Doge has been run out of Dodge for the most part. Remember, Doge was supposed to slash cover and then the courts say, well, you can't fire anybody. You know, it's just a cluster mess to clean up my language. But I mean, we have things like the credit bubble. We have private equity and private credit, things that were very small back in 2007. They're exploding through the roof. You got massive problems in private credit right now. So if you're a business and you can't get a loan from a bank and you can't float debt on your own, you go and borrow it through the shadow banking systems. It's like $1.3 trillion of this stuff out there. I think it's $1.5 trillion of that stuff. Then you have FHA loans, which have supplanted the subprime loans. They're now $1.5 trillion of FHA secure loans. That they were almost non-existent too. There were very, very few FHA loans going into the credit crisis of 2007. So instead of ninja loans, we now have FHA secure. The government took over. The government takes everything. The government prints money, takes bad assets onto their balance sheet. The banks make ninja loans. Well, we make that illegal, and then we say, okay, hey, FHA, we won't do no money down loans. We'll do 3.5% down. And these loans are defaulting. There's the default rate on the initial foreclosure rate is 20% higher year over year, and foreclosures in general are up a third, almost a third, 32%, I believe is the exact figure of foreclosures in the greatest economy the world has ever seen, Kerry.
Yeah, it's so great.
And NVIDIA goes up 6% because the orders are off the charts. I believe somebody wrote an article about the accounts receivable being like $500 billion. I mean, come on. And then there's all rumors about vendor financing. I mean, I'm not going to say I'm a balance sheet expert on NVIDIA, but you know what bothers me viscerally is when the CEO talks about business is off the charts in a prepared statement on his earnings release. I just I cringe. I'm cringing. And maybe the market is saying like, wait a second, this is something wrong here, because NVIDIA is up 6% in the pre-market and now it's down. Why? What's going on? It's all part and parcel of this bubble mentality where people don't tell the truth anymore. And they just lie to you about tax rebates and refunds and how great the economy is. In the meantime, the bottom 4 quintiles have been suffering mightily since COVID. I keep on hearing people, the idiots on some of these channels say, well, incomes have kept up with the rate of inflation.
Whose incomes?
Kerry, first of all, 30% of the American citizenry is not in the workforce. Okay, 30%. So right. Retirees make up like a quarter, like 20 or 25% of people are retired. Tell me if you're retired and it's 1/5 or 1/3 of the
voluntarily.
Tell me if your retirement income has kept up with inflation. What about the underemployed and unemployed? Has their incomes kept up with inflation? And even if you want to lie and say that's true, if you're employed, and say, well, okay, well, incomes have kept up with inflation post-COVID. That's only if you lie about inflation.
Yeah, obviously.
I mean, I don't know how home prices go up 20% year after year, and your official inflation CPI, the core personal consumption expenditure index is up like 7. Well, and then we're going to give you a 4% raise and say you're keeping up with inflation. It's just all bogus.
Yeah.
And Kerry, I've been doing this for 35 years. I have never seen so many parts of the economy and markets in the twilight zone.
Everything is rigged, Michael, right?
Well, I got to tell you, it looks more and more like finding the truth is like looking for a needle in the haystack, as they say.
So how do you play this here?
Well, first of all,
two themes: protection and profit.
So first thing you have to throw out is the mantra from Wall Street that You can't time markets. No one knows when a recession is coming. You can't predict a credit crisis. So just buy and hold a 60-40 portfolio. Do you remember back in 2022? Tell me how your 60-40 portfolio did. If you don't remember, I'll remind the audience that the S&P fell about 20% in 22, but long duration bonds lost over a third. They lost about a third of their value.
Yeah.
Now that's U.S. Treasuries. I'm not talking about, some exotic penny stock, high yield piece of junk. I'm talking about U.S. Treasuries lost over 30% of their value in 2022. And the reason is both those asset classes were in a bubble. Bubble. So when both asset classes are in a bubble and the carnage is going to start from a debacle in the bond market and the credit market starts melting down, well, that part of your portfolio isn't going to work. And then when rates spike and mortgage rates spike and corporate borrowing costs spike and stock valuations crumble, both sleeves of your portfolio are gonna go swirling down the toilet.
You're gonna get
so you have to be an active manager. And for me, I'd rather the market was up 10% and I was up 8%, for example, in 2025. I'd rather something like that was the case. And then you said, well, you underperformed the S&P 500. Well, I don't have an S&P 500 fund only, but I participate in bull markets. But here's what I didn't do. I didn't lose you 50% when reality hit. And if you look at something, it's just simple. Look at the total market cap of equities as a percentage of GDP. And yes, that is still a very valid metric. I don't want to hear about it. And some people say, well, U.S. corporations are international, so the numerators, the denominator-numerator ratio is bogus. Well, no, that's just straight, plain out wrong. First of all, foreign corporations are building stuff and producing stuff in America. That's why GNP and GVP, those denominators, are very closely related. They're actually, in fact, they're almost the same. So it is a valid metric. And when the total market cap of equities is 220% of GDP, you've got a real problem because the market could drop by half and still be overvalued. And it's not just that. It's the earnings yield being negative. It's the price to sales being a record high. The trailing 12-month PE ratio being, way out of whack. So we have a massive bubble in equities, and it has to be reconciled. And there's only two ways it can be reconciled. Stocks go nowhere for about 10 years, and GDP and incomes catch up, or the stock market has to crash. It's the only two ways it's going to happen. And I've never seen a bubble. I've never read about a bubble. I've never witnessed a bubble. I've never experienced a bubble or heard a rumor about a bubble that burst innocuously. They all crash. And this one is a gigantic one. So you can believe me. You can comment that I'm an idiot. You can say I'm a Cassandra. You can say what you want. I don't care. I am an active manager participating in bubbles, but with an eye out with a very robust algorithm that lets me know when I need to get more defensive. You could do what you want.
Mm-hmm. All right. Well, that's interesting. And at least there are things you can do to protect yourself. So
yeah, can I tell you what they are? First of all, you can't be in 60-40 portfolio. I just mentioned that. But you can own some precious metals. By the way, in a liquidity crisis, those will go down. So silver, platinum, those will go down. Gold, maybe less so, but it'll only go down for a short period of time. You should be a buyer when that happens. But you want to protect yourself? Really? There's four things that could protect yourself. There's cash. There's short-term bonds. The U.S. dollar will most often work as an offset because of a liquidity crisis. Everybody wants U.S. dollars. That might not work this time, but for sure you also have to short the market. So there's only four potential things that work, and at least three of them are mandatory: cash, short-term bonds, and shorts. And if you don't exit your shitcoin holdings, and you think that that's going to offset, if you think that an alternative asset class is BTC and all those other thousands of other derivatives, like, we got Dogecoin, you've got a million other things. That one of the reasons why I don't like cryptocurrencies is because while Bitcoin is limited to 21 million units, well, there's a gazillion other ones that serve the same function of being decentralized and an open ledger, blah, 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 immutable transactions. They all perform the same function. I mean, if there was an unlimited number of elements in the Earth's crust that were very, very rare, they were different, but they were rare, and they were indestructible, and they were discovering that element every day. Well, gold would lose some of its luster because I have so many other choices. I have so much competition for that which is very rare, very beautiful, and indestructible. Right? You follow that philosophy?
Yeah.
There's an unlimited number of blockchains that can be created, and Wall Street has bastardized the price of Bitcoin by pimping it like whores. Everywhere you look, it's crypto ballers are piling up on TV left and right, telling you is that, taking an asset class that probably has some function, some real utility. Maybe if you want to get your money out of a country that's going insolvent, maybe it's worth a few $1,000s a unit, but it's not a few $1,000s. It's $120,000 a unit, which is ridiculous. It's all Bitcoin is a code. It's a bunch of numbers and letters. It's all you own. It's electronic numbers and letters. Now you can take them off, put them in cold storage and write them on a piece of paper. But how much do you want for that piece of paper, Kerry?
Whatever the market will yield. I wish I was the one that thought of it in the first place.
Yeah.
So gold and silver is really your only defense here. What do you think of the recent movements of silver? $50 an ounce. They've been fighting it like mad. I don't want to get into conspiracy theories, but it seems like COMEX GPT cannot get used to the fact that silver is over $50 an ounce.
Yeah. So in the vanguard of protecting yourself against inflation, I always look to gold. Silver and platinum are secondary and tertiary roles in my view. But bear in mind, what I did say is that in a liquidity crisis, everything gets sold. So just keep that in mind. And that to me is if you look back in 2008, late 2000, the summer of 2008, into the fall of 08, and then didn't rebound until around, January, February of 09. Gold is a wonderful asset and a wonderful hedge, but in a liquidity crisis, you sell everything. That is why I didn't make what I call the four horsemen of the economic apocalypse. Now, gold has outperformed the S&P in the last quarter century. And I think now that we have a Federal Reserve, which is going back into QE, which is lowering interest rates, you're going to get a new head of the Fed, which is going to be what I call an obsequious sycophant, the administration, who's going to take interest rates. I mean, you got this guy Miran who wants to slash a series of this is what he said, a series of 50 basis point rate cuts. That's what he wants. So we're going back to, we're going back towards ZIRP, zero interest rate policies. We're going back into QE. And the deficit's going to go from where it is today, around $2 trillion to $6 trillion in a recession. So if that's where we're headed, if the liquidity crisis is genuine and it's coming, be aware that the market is so overvalued, it's going to be like a huge black hole sucking everything down except for what I just mentioned. And I'll mention it again. Short-term treasuries, the US dollar, and your ability to short the market adroitly will protect you and make you profit from what's happening. And I would use the liquidity crisis to stock up on gold primarily, because I think you're looking at a double-digit Fed's balance sheet from where it is today, double-digit Fed's balance sheet for sure, negative real interest rates once again, and inflation that's going to run intractable. So go get it while it's on sale. Well, forced sales of gold is what you should be looking to buy.
Right. Just like what happened in 08 and 09, right? Gold and silver crashed, and then $100,000, and then they took off.
Temporarily. Exactly. Use that as your entry point, because that's gonna bounce the hardest and fastest.
All right. So when we're looking at the liquidity event, which is inevitably going to occur, most of the collapses we've had have always hinged on that liquidity event. How far off do you see it happening?
Well, I can't give you a date. I can tell you when it's starting to happen. So what I've seen, this is what I'm doing. You asked me what I manage money for a living. I'm on the record saying that, and you're listening to somebody who said that we were in reflation and a growth cycle all of 2025. So this is not a perma bear speaking here. Mm-hmm. Someone who says that we were happily participating in the bull market. Lately, and I mean the last couple of weeks, we've been becoming a little more cautious because high yield spreads have stopped contracting. They're starting to rise. Financial conditions have stopped easing. They're starting to tighten. And if you look at other things like the 5-year forward inflation spread, if you look at copper gold ratio, I have a model. There's 20 components in aggregate in the model. The model tells me just to get a little more cautious. So it's not a binary event. I don't say bullish, bearish. I don't do that. I'm just saying that liquidity is tightening. I don't know if it's the yen carry trade that's evaporated. I don't know if it's the reverse repo facility that's now bankrupt and at zero. I shouldn't say bankrupt. It's back to zero. So reverse repo facility is the excess reserves from banks that once was $2.5 trillion. Now it's zero, or effectively zero. So that is one of the reasons why the Fed's panicking, because when you have bubbles like this, you have to keep inflating them. Otherwise they just collapse in on themselves. They implode. So, I'm getting more cautious. That's what I'm doing. So I'm selling some of my AI related stuff, and I bought some healthcare. I did increase the short that I have in the market. So I'm just not interested in going down with the ship, and we're not going to go down with the ship. God willing, we are going to take the appropriate steps when the credit is two ways you get a credit crisis. One is because of a deflationary recession / depression when there's no money around. And the other one is when the liquidity runs out in the bond market, and that you have a bond market crisis where rates spike, even though the economy's not yet falling to pieces. I'm looking out for both those occurrences. And I'm going to protect against it. That's what I'm going to do.
So I have a theory that these markets actually, when these things happen, like 08 and 09, they actually happened long before the public is made aware of them. So all perhaps the insiders who know can adjust their portfolios accordingly. It's kind of like a black hole gobbled up that star 20 years ago. We're looking through our telescope and that star looks like it's still there, but in reality, it's gone. And that's what I think has happened to the silver market and the gold market. I think they've already imploded, but nobody bothered to tell us.
So that's your theory?
Yeah.
That's your theory? I base my entire model on it. And I've been doing this for 35 years. I used to work on the floor in the New York Stock Exchange. I'm not a neophyte by any means. What you said is what I based my model on. What you're really saying is that the stock market is based on insider information. Okay? The people who know what's going on, I call it the few oligarchs that run this planet, the multi-billionaires that run this world. Okay, they know when the major banks, their assets are starting to erode. They know and they act, and that's why you see that my model looks at the arcane parts like CDS spreads, these arcane things that CNBC will just tell you buy and hold, or this market went down today, or we don't know what happened. No, what's happening is that the credit markets are starting to fracture and financial conditions are starting to tighten, and the market is going down. They say, well, it's just a normal correction. Look at the 50-day moving average or the 200-day moving average, the golden cross or the death cross. BS. The insiders know, they react. I'm following them. That's what the model is based on. And
I think the silver price fixing mechanism has already collapsed. It collapsed back, I think, in May when silver crossed $32 and the price became uncontainable. And I think we're seeing the same thing there. The black hole already got all the star, but we're still seeing the light coming from the star because we're light years behind the insiders.
Yeah, well, you don't have to be. The insiders take steps to protect themselves, and if you follow their actions, you could be saved like they are. They don't come on CNBC and announce what they're doing. I can tell you that.
And they don't brag about it. They keep their mouths shut.
Keep their mouths shut. They do what they have to do. And you need to follow them. I don't know them. They're not friends of mine. They don't tell me what they're doing, but I can see their footprints.
That's the sign of a market pro. You can actually see, because you don't see it directly. You don't hear them placing the orders or see them, but you see the aftermath and you see the patterns. We're talking pattern recognition. And that's what sets you apart from some guy who just says buy ETFs.
Well, first of all, 95% or thereabouts of money managers don't manage the money in a long short strategy. Their rubric is, well, I'm going to kind of put some money here that looks like the S&P, and I'll put some money here in bonds based on your age, and I'm going to go out to the golf course and try to raise more money. They're salespeople. And then you have the people, the small amount of people who actually run a long short strategy. But how many are really economists and market strategists? How many of those people are?
No.
And how many of those people actually have an algorithm that works, that gets you out? I mean,
all right, the algorithm.
My model picked up on COVID before, I didn't know if it was I don't know if it was the sniffles coming from China or if it was the bubonic plague. I didn't know, but my model said, whoa, something's happening here. Insiders are dumping and they're buying the protection for their portfolio. And I'm going to do what they do. Now, I'm not saying that I'm some kind of, super genius or have this kind of knowledge that no one else knows. I just been doing this long enough, and I'm independent and objective enough to say, what do I need to look at to let me know when there's a problem, a real problem in the credit markets, or when a recession is going to happen?
Well,
and that's where that's the model. That's what the model is built on.
You're what we call, Michael, in the trade, a certified algorithm decoder.
All right, I guess I'll take it. I don't know what that. I don't even know what that means, but it sounds good. It's better than
certified.
Instead of being the used carpet salesman. How's that?
Yeah, a certified financial algorithm decoder, because that's exactly what it is. You see the patterns.
Yeah.
Understand the algorithm behind it, and then you act accordingly. Hey, just tell us where we find you, how we get more info on the fund there.
So the Pentoport website is pentoport.com. I have a weekly podcast for $50 a year. You'll get my thoughts on the salient economic data and a high-level view of the markets. And then if you were a U.S. citizen and you have $100,000 and you qualify for a long-short strategy, you're suitable for it, I'll manage your money directly in the inflation, deflation, and economic cycle model, where I have some of my money there too. I mean, my clients' money's in it. My money for the market, not my real estate holdings, but my money is in there too, because I eat my own cooking. And the only way I would be able to invest in this market is if I had that algorithm, because otherwise I wouldn't trust it. I would be scared to death. And I'm sure a lot of people are, and they should be. People who are honest and objective, and they see what's going on around them with, you can't afford a home. Home prices are unaffordable for the first-time home buyer. The stock market is way overvalued. You're looking at this gambling and this nonsense that's going on in the credit markets, and you see people borrowing, billions of dollars for this AI craze, which reminds me a lot of the internet craze in 2000. Great.
Exactly. .com.
It's a great technology. It's a productivity machine. It's going to be wonderful, but there's overspending on it now.
Overcapacity, like everything else that they do. And you make a great point there. Hey, stay safe on the pickleball court. Don't run backwards. Whatever you do, just let the ball pass, because you got a lot of investors in your fund there who are counting on you to stay healthy and mentally sound here. Wow.
Okay. I'll wear a helmet. Well, you, my Frankenstein.
Good idea. Good idea. Well, it's those compound wrist fractures that really kill you, and the Achilles tendon ruptures that pickleball is famous for. In fact, I wrote a book that I just dropped recently called HOA Emperor, about a guy who goes into witness protection. He comes to South Florida. He starts taking over HOAs, turning them around, making them beautiful, all the while stealing them blind. And one of his scams is pickleball. So he's got the great pickleball caper of Port Everglades.
All right. Good to see you, Kerry.
You too. You be well.
Take care. Bye-bye.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.